Let's continue that retail theme now. On the line from Cape Town is Janine van Zyl, who's an analyst at OMIG, so that's the Old Mutual Investment Group, South Africa. Janine, there was an interview, which I don't know if you heard, that was being conducted by Alec with Grant Patterson of Massmart. A couple of quotes that I want to pick out there. Number one, he said, we're a reasonably backward retailer, talking about Massmart itself, and the one right at the end there, I can't see what's going to save us, talking about the economy. It doesn't matter how advanced you are as a retailer, if people haven't got any money, they can't spend money in your shops. Is the retail growth story over, do you think, Janine?
Wow. Well, he's obviously talking specifically about South Africa here. And I think to an extent we would say the same. There are a lot of the tailwinds that we've had over the last 10 years that have either gone away totally or are diminished. For example, the very big growth in grants that has really supported the bottom end. Job growth, which we had to an extent, which really does, it's difficult to imagine why we're going to get job growth in an environment like this where labour is just is so difficult to deal with and people don't want to employ or companies don't want to employ. And then on top of that, there's not a huge amount of growth coming from the rest of the world to actually support us. So maybe the one driver we would have is that we've got a weakened rand and possibly manufacture could grow a little bit, but that doesn't last long because eventually that feeds through into inflation. So yes, I would agree with him to an extent, but we see it as a slow growth environment, not a negative growth environment for the consumer.
Yeah, inflation you mentioned 6.3% year on year. Yesterday some people are saying it's going to come back again, others it's going to continue going with the rand doing what it's doing. Never mind that. What about results you've seen coming out today? Specifically Massmart, we just spoke to Grant Patterson and we've had Edgar's as well out, not a listed company but with aspirations I think to come back to the exchange. Truworths later on. What is your assessment of the health of the South African listed retailer?
Well, the listed retailers are looking better than the unlisted at this stage. If I look at it, the Edcon results was very weak. I don't think unexpected because we know that Edcon has been losing a lot of ground for a long time now. While there's a lot of talk of turning them around and bringing them back and revamping stores and gaining market share back, it's definitely not in this result yet. I wouldn't write it off totally, but with a 3% sales growth compared to what we saw Mr. Price the other day, 14%. Woolies 21% and Truworths 13%, which they've already guided, even though we see the result later today. They really aren't holding their own. So I think the listed retailers are doing better. And interesting, I think that Grant also referred to it, the food retailers do seem to be doing worse than the clothing retailers at this point in the cycle. I'm not exactly sure why, but I think partly to do with the fact that such a large amount of the food retailers are also going to the lower end where there's more pain. The upper end is still actually feeling okay, and they are larger clothing buyers. So that might be explaining some of it. We could see that also in the Shoprite and the Massmart results. But all the divisions that are actually dealing with the lower and middle to lower ends are definitely seeing worse results. The Mass Cash result in Massmart only showed 5% sales growth, and the difference between Shoprite and Checkers, I think Whitey also referred to, there was a good sort of 3% difference in the sales growth there. So,
Janine, if you had to start a retail fund now, sorry to interrupt, if you had to start a retail fund now, what would your leaning be towards? In other words, where would you be overexposed and where would you be underexposed or even ignore?
I would be overexposed to the clothing retail not because their updates have been good, that's not really because we'd be looking forward from here now, but mainly because their prices have actually traded down significantly in the last few months. So on a pricing level, all the clothing retailers are looking much cheaper than the Massmart, Shoprite, and even the Pick and Pays where you might or might not expect a turnaround. But yeah, and I don't think at this stage I'd be overweight food yet. In fact, I struggle to find anything in the food sector that I would really like to buy, possibly Spar. But I wouldn't go heavily overweight the consumer because we are still in the thick of the cycle. And as Ron pointed out, it's difficult to see us coming out of the cycle except to the extent that we end up lapping or annualizing the downturn which started at the end of this year. So, maybe our sales growth won't be quite as bad at the end of this year because we are already lapping weak numbers.
Janine, on that note, I'm afraid we'll have to leave it. But thanks very much for joining us this lunchtime. That's Janine van Zyl, Senior Industrial Analyst at